Good day Forex trader. Your USD Forex signal, bullish consolidation above $1.1305. Today's your USD signals. Risk 0.75%. Trades must be entered before 5 p.m. London time today only. Short trade ideas. Go short following a bearish price action reversal on the H1 time frame. Immediately upon the next touch of $1.1394 or $1.1456. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. Long trade ideas. Go long following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.1305 or $1.1251. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Your USD Analysis. I wrote last Thursday that there was clearly an active and strong bearish trend, with all the technical, fundamentals, and sentimental factors working in favor of the US dollar and against the euro. The price was falling to new long-term lows with strong bearish momentum, and my only question was where support would begin to hold. I did not see any reason why the nearest support level at $1.1195 would be a long-term low. I thought that the best opportunity would be a short trade from a retracement to the resistance level at $1.1234, which looked likely to hold. As it turned out, we had already seen at least a medium and possible long-term low at $1.1195, although I had no good reason to call this reversal at the time. The price did not reach $1.1234 later that day anyway. The price over the next days went on to break strongly above $1.1234 and continue to rise higher with some strong bullish momentum. The bullish reversal was caused by the discovery of a new coronavirus variant which might evade vaccines and cause a big economic impact. This sent the euro soaring for a while, as in this circumstance the US dollar is less favored as a safe haven when risk-off sentiment dominates the market. The jury is still out on the impact of Omicron. In the meantime, markets are nervous and volatile. Technically, we see a medium-term bullish picture, with the price finding support last Friday at the $1.1234 level. We now see higher support at $1.1305, confluent with the round number, and the price is making a bullish consolidation there. It seems poised for a further advance. The best approach here today is to look for a long trade from the next bounce at $1.1305 and then manage the trade carefully on a short time frame. I think the resistance level just below $1.1400 is very likely to hold today unless we get some dramatic news later today about Omicron or if any FOMC member of Janet Yellen say something surprising. Gbp Usd Forex signal, bullish ahead of US NFP data. The pair will likely keep rising as bulls target the 38.2% Fibonacci retracement level at 1.3470. Bullish view. Buy the Gbp USD and add a take profit at 1.3470. Add a stop loss at 1.3200. Timeline, 2 days. Bearish view. Set a sell stop at 1.3280 and a take profit at 1.3200. Add a stop loss at 1.3350. The Gbp USD pair was little changed on Thursday morning as the market reflected on the statement by Jerome Powell and the strong economic data. The pair is trading at 1.3320, which is about 0.95% above the lowest level this week. Strong UK and US data. The GBP USD pair wavered as investors reflected on the strong economic numbers from the US and UK. On Wednesday, data by Nationwide showed that the UK home prices continued rising in November as the supply and demand imbalance continued. The home price index rose from 0.7% in October to 0.9% in November. This was a better number than the median estimate of 0.5%. On a year-on-year basis, the index rose from 9.9% to 10%. This means that the average home price in the UK has jumped by more than £23,000 since the pandemic started. UK home prices have risen because of the overall low interest rates in the UK and government incentives to encourage home ownership. Also, there has been a shortage of homes. Additional data from the UK revealed that the manufacturing sector did well in November. According to Market, the manufacturing PMI rose to 58.1 in November. A PMI reading of 50 and above is usually a positive sign. Therefore, there is a possibility that the Bank of England, BO, will turn hawkish in this month's rate decision. Meanwhile, in the United States, the ISM and ADP published strong numbers. According to the Institute of Supply Management, ISM, the country's manufacturing PMI rose from 60.8 to 61.1. A separate report by Market placed the figure at 53.3. The labor market is tightening. According to ADP, the U.S. private sector added 534,000 jobs in November. This was better reading than the previous 570,000. These numbers came 2 days ahead of the official NFP data. Gbp Usd Forecast. The GBP USD declined sharply on Tuesday after the hawkish statement by the Federal Reserve Chair. This situation changed as the market reflected on the impact of quicker tapering. The pair is now trading at 1.3318, which is slightly higher than this week's low of 1.3200. On the 4-hour chart, the pair is trading along the 25-day and 50-day moving averages. It has also moved slightly below the important resistance at 1.3400, which was the lowest level on September 29. Therefore, the pair will likely keep rising as bulls target the 38.2% Fibonacci retracement level at 1.3470. Aud USD Forex signal, extremely bullish above 0.7170. The pair will likely keep rising as bulls target the first resistance at 0.7230. Bullish view. Buy the AUD USD and set a take profit at 0.7230. Add a stop loss at 0.7070. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7100 and a take profit at 0.7000. Add a stop loss at 0.7200. The AUD USD pair wavered on Thursday morning as the market reflected on the hawkish tone by the Federal Reserve Chair and the positive numbers from the US and Australia. The pair is also wavering as investors focus on the upcoming jobs numbers from the United States. The pair is trading at 0.7143, which is slightly higher than this week's lowest point. Hawkish Federal Reserve. The biggest catalyst for the AUD-USD and the US dollar has been the relatively hawkish statement by the Federal Reserve Chair. On his first day of congressional testimony, Jerome Powell sent shockwaves by his statement on quantitative easing and tapering. He said that the central bank will continue tapering its asset purchases at a quicker pace than expected. In its interest rate decision in November, the bank signaled that it will end its purchases in June next year. Therefore, there is a likelihood that the bank will now wind down the policy in the first quarter of 2022. This statement will therefore put pressure on the Reserve Bank of Australia, RBA, which will start its meeting on Monday and deliver its decision on Tuesday. There is a likelihood that the bank will signal that it will start hiking rates earlier than 2024. In the previous meeting, the bank signaled that it will hike in 2024. Therefore, with data from Australia being relatively strong, there is a likelihood that the bank will also turn hawkish next week. On Wednesday, Data published by the country's statistics agency showed that the economy contracted by 1.9% in the third quarter. This was a better figure than the median estimate of -2.7%. The economy grew by 3.9% on a year-on-year basis. In addition, the manufacturing sector did well in November, according to numbers by Market and Australia Industry Group. And today, numbers showed that the country's retail sales rebounded in October. Aud USD Forecast. The 4-hour chart shows that the AUD USD pair declined to a low of 0.7065 this week. This price was along the first support of the standard pivot points. It then rebounded and is now trading at 0.7130, which is slightly below the standard pivot point. The pair is still below the 50-day moving average while the MACD has started moving upwards. Therefore, the pair will likely keep rising as bulls target the first resistance at 0.7230.